Hey everybody, we are going to talk about one of my favorite stocks in the market, SoFi, which has become one of my largest investments in my entire portfolio. The stock has roughly quadrupled from where I bought it, and that really only happened in the past year and a half or so. It's been excellent performance, but excellent business results. They recently put out their third quarter earnings and have a few other major news items, so I'm going to talk about those. Before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel. So let me go ahead and share my screen. We'll get right into it. Just first, a couple of little tidbits of information. So like I said, SoFi just released its third quarter earnings. The results were pretty impressive all around. I'll get into the results in just a minute. And the other big news item today, on the day I'm recording this, probably not on the day you're watching this, but on the day I'm recording this, SoFi just announced that crypto trading is back on its platform. And now SoFi is officially the first national chartered bank to offer cryptocurrency trading to all of its customers, or to retail customers, I should say. There are some banks that have it for institutional investors, but SoFi is the one that's offering it to retail. Pretty impressive accomplishment there. And if you just look at the numbers, SoFi is performing really well. Revenue is up 38% year over year, record high profitability. It is a highly profitable company now, 14% net margin when you consider it just achieved profitability for the first time about 2 years ago. All-time high in adjusted earnings per share. Fee-based revenue, which is higher profit, continues to grow significantly, 50% year over year. Record high loan originations. Asset quality is better than ever. Total deposits grew. SoFi went from having zero deposits in 2022 when it became a bank, got its banking charter in early 2022, and now it has $33 billion of deposits on its balance sheet. So really impressive growth from zero. Tangible book value is growing very, very fast, which I'll get into a little bit more in a second. So the numbers really look good. So this is SoFi's membership base. You can see growth is kind of accelerating back again a little bit. From 2024 to now, the year-over-year growth rate is 35% in the third quarter. That's the most members they've added in a single quarter ever, a little over 900,000 new members during the quarter alone. SoFi still does not have that great brand awareness. It's like 10% of the United States knows what SoFi does. So this could be this could be sustained for quite some time if they keep executing well. These are just some profitability metrics and where that's trending. Adjusted EBITDA, which kind of tells a little bit of the story of things that are not accurately reflected on the bottom line with banks. There's reserves and things like that can distort bottom line earnings. Adjusted net income, like I said, SoFi first became profitable at the end of 2023, and you can see how it's just growing very, very rapidly in terms of margin and things like that. The fee-based revenue, which is things like the lending platform, like referral fees, everything that's not interest income really, is growing very, very fast. They're at an annualized rate of $1.6 billion of fee-based revenue. Just a couple years ago, that was $385 million. And you can see fee-based revenue now makes up 43% of SoFi's business. That was about a quarter of the business in 2022. So growing much faster than the overall business, and that's great because it's lower risk, just lower capital requirements. So earnings per share, I mentioned the highest earnings per share they've had yet in a single quarter. They keep beating their guidance. They keep setting pretty lofty expectations and beating them. And one of the things I get complained about, or I hear the most complaints about from investors, is that SoFi is so expensive. They trade at a higher price to book value than any other bank stock. And yes, they do, but deservedly so. If you're doubling your tangible book value in 2 years, you deserve to be trading at a premium. So they're growing their tangible book value very, very quickly and accelerating the growth rate. You can see this is the year-over-year increase on the bottom here. They're expecting to add more than $2.5 billion to their tangible book value. So this is on a balance sheet. This would be called the shareholders' equity, and you take out things like goodwill. So very, very impressive growth there. They're best known on the lending side for personal loans, but it's really worth pointing out that student loans and home loans, which are their other two major lending types, are showing real signs of promise. Student loans, now that the dust is kind of settled with all the Trump administration's student loan, pauses and restarting interest and all that kind of stuff, we're starting to see more private student loan activity. And you can see it was kind of flat from, this was the third quarter of 2021 to the third quarter of 2024, and now we're starting to see it really explode again. SoFi started out as a student lender, and it's also worth mentioning that now that the administration is talking about privatizing some of the federal student loan portfolio, that creates an opportunity for SoFi, especially on the servicing side. So that'll be interesting to watch. Home loans have not been a big focus of SoFi, but it's a big opportunity right now, especially as interest rates fall. And you can see the light colored boxes right here are the third quarter numbers. Third quarter home loan volume roughly doubled year over year. And that's without too much movement in mortgage rates. If mortgage rates really start to fall, this is a massive opportunity, especially because SoFi has, this was what SoFi did in home loans in 2021. And if you remember that first slide where SoFi's membership base, SoFi has roughly 4 times the members that it did in 2021. So as rates fall, this is a massive opportunity to sell home loans to its existing member base and new members as well. So finally, I mentioned that asset quality is looking pretty good. And by pretty good, it really the best ever. The dark bar in the middle is personal loan net charge-offs. You can see it's at 2.6% right now of the portfolio on an annualized basis. That's lower than it's been in the past 3 years. So everything's trending in the right direction. You saw some student loan defaults tick up, but that really was it's a one-time blip more than anything significant. So asset quality is great. The bulk of their loans on their balance sheet are personal loans, and that's really, really nice to see. So all in all, great third quarter. I'm still a buyer of the stock. It's one of my largest investments, but I'm still going to gradually add shares over time as long as they keep executing. So I'd love to hear what you think about SoFi. Is it a buy right now? Has it gotten too expensive? Love to hear what you think. Leave me any comments you want. I'll do my best to respond to any of them individually. And thanks for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.